once the style clears, you'll be
Real life and I'm tuning.
Yeah, it's your boy Crypto Blood, and welcome to another episode of My Two Satoshis. It is September 25th, 2019. Yes, GS Bonanza again. Jurassic 5 improvised. Hope you guys enjoy that. What's good, people? Hope you guys are doing well and healing from this bear market. It seems like we're gaining some footing here at these levels, around 8,000. I personally think even if we go up a little bit, I do not see us breaching that 9,400 area right away. It's going to take a couple of times, a couple of tries, in my opinion. So we may move up a little bit from here, but just know that 9,500 is a very strong resistance area now, since it was a strong support area for us in the past, as I went over in yesterday's video. But today we're going to look at Tether, or I should say Bitfinex, the parent company of Tether. Looks like they won a battle, maybe not the war, but definitely won a battle in the courts today. We'll take a look at the details. I think this actually came out yesterday, but looks like they've won the motion to keep documents out of the court. So we'll take a look at that. This is out of Forbes.com. Second article out of the Bitcoinist. Bitcoin's price plunge came from $1.2 billion sale, data says, amid hash rate row. And I saw people on Twitter yesterday and today talking about Bakkt had something to do with it, or CME. Like, I don't think these people understand how these markets work. First, let's just talk about CME. CME had nothing to do with it. It's a cash settled only market, meaning if I buy a futures contract on the CME and it closes and I'm owed, let's say I make a profit of 15%, 20% on that contract of 5 Bitcoins, they're paying me in cash. They're not paying me in Bitcoin. I can't even ask for Bitcoin. So there's no direct correlation in the need, or how I should say, there's no supply pool on Bitcoin spot, like actual Bitcoin in that market. So if anything, the traders over there are following what the spot market is doing, or at least what like BitMEX. BitMEX has a bigger pull and impact on the price of Bitcoin than anything. All right, so CME had nothing to do with it, and damn sure Bakkt had nothing to do with it, because Bakkt, as of today, let's take a look at it. Bakkt has done a total of 71 contracts, people. Horrible. That's $71,000 roughly of volume for Bakkt. So epic fail out the gate so far. This is on the monthly contract, not the daily, but you get the point. And so it looks like we may have found the culprit here. So we'll take a look at what happened, who sold, why, when. I don't know if we'll ever figure out why, but definitely when and how much here in a second. And the last article out of Decrypt Media, what the death of Kick means for other crypto startups. This was crazy, man. So Kick, I know you guys know I've reported and followed this whole situation with Kick versus the SEC and how they started a fund. They wanted us to donate to a $5 million fund to fight the SEC. I thought it was nonsense, totally stupid, and a waste of money and time. Well, they're closing down Kick, which is their messenger app, to help put focus on pursuing the Kin token and its operations and fighting the SEC all at the same time. They're going to be closing down on Kin in a minute too. This is just crazy. They should pay the fine, give the money back, and just move on. I don't know. But anyway, we'll take a look at why they've closed down Kick, which was the messaging app portion of the company. But before we get started, make sure you guys jump over to Moon Lambo's new website, shopmoonlambo.com. They've got new apparel, new website, same discounts though. You can still save 10% if you use the word CryptoBlood10 at checkout. And also Ask CB. I'm going to be doing the first episode in a new series called Ask the Block, and I'm just basically curating all questions that you guys offer me, crypto related. For now, all you got to do is hashtag Ask CB. I've got a nice handful of them right now piling up, so I appreciate the ones who have participated, and I think I'll be doing it either this weekend or Friday, right before the weekend really starts. Let's go ahead and take a look at this heat map. Today we're up 0.7% in Bitcoin to $8,346. Ethereum up 3.5% to $168. EOS up 9.2%. Wish I would have bought the dip on that one to $2.84. Still a long far cry from where we were a few days ago at $4. Litecoin is down 3.5% to $56.81. And then we've got Binance down very badly, $15.95, down 1.25%. And XRP is up 2.6% to 24 cents right now. But overall, kind of a recovery, or at least building a base, as I said at the beginning. But as you can see, we broke downward out of this pennant. And this area, as I stated the other day, 9,400, just say 95, is a very strong resistance area now for us. But I personally, if I zoom out and go back here, I mean, this could possibly be an area of support. We're right at it. We're right at an area, and I'll go ahead and mark this so we have this on our charts. And I'll change that color to maybe purple. So this is possibly an area of support, but if we can't keep this area, people, 7,500 is the next level, and that actually I think is really the strong area right there, because I'll tell you why, and you'll again learn this if you sign up for my trading course. Let me just give you a sneak peek. You can count the number of times you see some activity here, and this is another area where I think we'll have at least one more chance of support. 7,400 I think should be the final area. If we drop any further than that, yikes, we're going all the way to 5,600. Looks like we may be able to hold this, but again, you know, we may see something like this play out, a bounce off of that, and then head higher. But I don't think we're gonna see a break back above 9,400 on the first try. I really don't see that happening. But are we going all the way back to, now I'm hearing people talk about 4,000. It's too far away to even come up with those numbers. You have to take it one step at a time, one technical point at a time, okay? And so right now, 8,300 is an area. If we can keep this point, then we're good. We can build a base. If not, then the next area is 74. If we can keep that, then maybe we'll trade in between 83 and 7,400. But let's take a look at this first article out of Forbes. Bitfinex and Tether win stay in $900 million New York Supreme Court case. It says the cryptocurrency exchange Bitfinex has won a motion in the appellate division of the New York Supreme Court, which means it won't have to turn over documents pertaining to its use of the cryptocurrency Tether until a future date, if at all. Tether, a so-called stablecoin, is supposed to be backed on a one-to-one basis by the US dollar. However, the New York Attorney General's office in April accused the company behind Tether of essentially minting the cryptocurrency for Bitfinex to the tune of as much as $900 million. So if the stay had been rejected, Bitfinex parent company IFinex would have been required to continue turning over documents pertaining to Bitfinex and the Tether cryptocurrency. A court document dated today is being presented as a victory by a person familiar with the case, speaking on background, but it's only a partial win. The parent company of the Hong Kong-based cryptocurrency exchange was sued by the New York Attorney General's office. So what's important to know here, that no official complaint has ever been filed against Bitfinex or Tether as pertains to this motion. Rather, today's motion means that the companies will not have to provide documents about their relationship to investors until a decision on an appeal to dismiss the entire case has been reached. The New York Attorney General's office confirmed that while the partial stay means the companies won't have to turn over the paperwork in question, they could still be required to do so at a future date. A representative over at IFinex and Tether Holdings Limited, speaking in similar terms, said, "We are gratified by the panel's decision and we look forward to addressing the significant substantive issues before the appellate court." So there you have it. Nothing, people. Tether's not going anywhere. Once again, I have to help you understand. You know, you got to stop listening to the fear mongering. I know that gets good views and gets your emotions all riled up, but ain't nothing happening here. And as I was telling someone on Twitter earlier, through this case, it was found to be true that Tether was not backed one-to-one but it was backed about 75% the amount of floating USDT tokens. So though it's not 100%, it is for sure a far improvement to what we know as the fractional reserve system, where they don't even have 3% of the money to back what's outstanding in circulation. So 100% would be great. 75%, I actually was kind of surprised that they has that much. 75% reserves is pretty high. No bank ever has that much, 10% at most, but really in these environments, they're doing 5%, 3%, 1%. You see what happened last week with the Fed having to come in to the repo market and pretty much bring liquidity to these banks because they couldn't lend from one another. So that lets you know how much they're rehypothecating these dollars. So, you look at it that way, then Tether is more official than any other institution we have in existence. So next out of the Bitcoin is, let's take a look at what really caused this plunge. $1.2 billion sale is what did it. And it looks like it has nothing to do with this hash rate drop, which ironically enough just jumped back up too. So I don't know what that was about, but a giant Bitcoin transaction, possibly a sell-off, caused Bitcoin to drop to lows under $8,000 on September 24th. ByteTree says exchange triggered short-term panic. So it says that was the conclusion of monitoring service ByteTree, which provides fresh data for the past 24 hours trading activity on Wednesday. This theory offers a new perspective on the tumultuous week for Bitcoin investors. They watched as the largest cryptocurrency fell by up to 20% in an hour. According to ByteTree, a transaction from a private wallet to an exchange worth $1.2 billion triggered the dip. The scale of funds involved sparked panic selling in the session. So I don't know if you can see this live price exchange volume chart here, and they've got it highlighted, transaction value. I'll try to zoom in on this, but it says in this case, it looks like large transactions or transfers were made from wallets into an exchange and subsequently sold. In another comment, they added additional information about how the sequence of events took shape. Gradual buildup of sales, minimum buys, big on-chain movement of $1.2 billion at 3 p.m. BSD correlates to accelerating fall in price as the order book is eaten up. It looks like this was the tipping point that triggered the short-term panic. It goes on to say, as trading statistics trickle through, other well-known cryptocurrency figures are dispelling myths that Bitcoin has lost technical stability. Prior to the rout, Bitcoin's network hash rate appeared to drop 40%. Initially, commenters suggested something was wrong and that mysterious changes were taking place on the fundamental level. This is a false narrative others have countered. Hash rate in itself is immeasurable and data charts are only an estimate. So a drop in hash rate on the charts can occur as a result of slower block times and does not correspond to miners leaving the network. The idea hash rate charts can directly measure Bitcoin's hash rate was a surprisingly common misconception. So there you have it. It looks like it was a sale of $1.2 billion. That did it, people. Nothing more, nothing less. I'm getting sick of people trying to correlate CME futures with spot price of Bitcoin. It's cash settled, people. I don't know how many times I have to say that. Now, when it comes to Bakkt, if Bakkt ever gets its volume up, Bakkt will definitely have a direct impact on the price of Bitcoin. So I will be watching that market, if it ever comes to life, very closely. Last article, what the death of Kik means for other crypto startups. It says in a bid to survive an SEC lawsuit centered around 2017 Ken token offering, Kik's CEO Ted Livingston wrote on Monday, September 23rd, that the company was pulling the plug on its Messenger app. Not just that, he also said it was downsizing to just 19 people. Industry reaction has been fast and furious. The big question is, should ICO-funded crypto startups be worried? And if so, who? Mark Boren, a partner at Fisher Broyles, specializes in both blockchain and securities law. He told Decrypt Media, Kik's downfall makes it clear that the risks associated with an ICO are significant enough to threaten the existence of a business. An existing ICO should objectively look at its situation and seek advice from legal counsel. The upshoot of that, he said, may be paying a penalty and returning funds. In the end, this means that most ICO funded startups, especially those who did their ICOs when crypto prices were at all-time highs, are likely to shut down, similarly to Kick. Another lawyer said he agrees that the news is not great for ICOs, considering the fact that Kick Interactive was one of the first major tech companies in the world to hold an ICO and raise about $100 million. Of course, this will not be a nice message to all other ICOs. The lawyer goes on to suspect that, however, the Kick's recent moves, including the decision to push Kin, are part of a larger legal strategy geared toward fighting this specific lawsuit, though it's unclear what exactly that strategy might be. Moreover, it might sound strange for a company whose token is being labeled as security to say it's pushing broader use of its token, even as it removes its primary utility integration on Kick Messenger. It goes on to say the SEC's case is not against Kin in its current state, and that the SEC's view on Kin in its current state is unclear, he said. Rather, the SEC's case is for the sale of Kin in 2017. Therefore, nothing will change in the SEC's current case with respect to the veracity of its claims. It will continue to pursue its claims that Section 5 of the Securities Act was violated. So what do you guys think, man? When I saw this, I'm like, wow, this is unfortunate. And I told you guys when the whole push to resist the SEC and go to court, I told you guys then this was a bad mistake. I also think it's a bad mistake in the situation with Reggie Middleton that he continued to pursue that. It's just so hard to win against those guys because of the amount of resources they have behind them. You or a company has limited resources. SEC has, enough resources to really make things happen, or at least drag it out to the point where you can't afford to continue to fight it. And at that point, you've lost any liquid capital you had to run your business, and everything is ruined. So it's a lose-lose in my opinion when you're talking about dealing with the SEC and these ICOs. You guys let me know your thoughts though. Was this a good move for Kin, or I should say Kick, to shut down their messaging app? I don't know what their strategy is here, but it sounds strange as hell, and I don't think it's going to work. I'm going to be honest with you. Again, let me know your comments below. Shout out again to G Esperanza for that song request, Jurassic 5, Improvise. We got one more for him tomorrow, Blue, called Vanity. It's your boy Crypto Blood. Make sure you guys like, share, and subscribe, and click that bell to be notified about unbiased crypto news reported by yours truly, Crypto Blood, 6-year vet in this game. I'm out of here, people. Holla.